Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been a full-time trader for the last 13 years. We're going to check in on GameStop here, talk a little bit about what's going on, and then check in on the charts to try and determine the most likely scenarios as we head into next week. Bear with me. I am in travel mode currently on a mountaintop seeing string cheese incident, but we had a lot of action today. It was Roaring Kitty's first live stream, and if you look back at the last two videos we've done this past week, we've been pretty on point as far as determining some most likely scenarios. We talked about the YouTube stream being the next step for him, and I was planning on holding into that YouTube stream, but then once that insanity happened after hours yesterday, talked about selling my position in the 60s. I did reload a little bit, exited it once the dilution news came out. We'll talk about that in just a moment, and also talked about how the stream was potentially going to be a sell the news event, which it ended up being. So overall, my summary of his stream was essentially nothing new. And I think a lot of people were hoping he had some grandiose master plan, when in reality he was just being himself and saying, I don't know what I'm doing. I think I'm taking some high risks, and we'll see how it plays out. And I think people were hoping for a little bit more than that. But just want to remind everybody that for every one hedge fund that's in trouble short with GameStop, there's a dozen that are making bank in both directions. As I'm speaking as a full-time trader, that when you observe things enough, after watching the market every day for the last decade, you get to know the most likely scenarios. That's why, a little bit of luck, a little bit of educational guess that we've been able to be somewhat on point with the price action this week and at least know how to position so we're not getting hurt. We're profiting. And if I am able to do that as an individual, you better believe that there's a bunch of hedge funds that are taking advantage of this volatility. And I talked about in the last video how when you get this kind of volatility, it's almost like the technicals are more trustworthy. The most likely scenario plays out. Granted, last time around 3 years ago, GameStop, that was not the most likely scenario at all, which is why so many hedge funds and shorts got in so much trouble because of how unusual it was. And this move is definitely very volatile, but it's not, out of left field, extraordinary, unusual. So, where do we go from here? I don't think, he has any tricks up his sleeve at this point. He's still holding his position. And, the dilution news, the GameStop released their earnings pre-market so that they could have this dilution news. They couldn't do that without the earnings being out. So they released the earnings early, and you can view the dilution news in two ways. You could say, okay, the company has 75 million shares that they can sell now, and that benefits the company's longevity and gives them more cash, even though they've already got $2 billion. But it's going to slow down the price. If I'm a short or if I'm a bear, that's bear ammo. Why? Because if there's any kind of unusual, significant move to the upside, you know that the company is going to be selling shares on the ask, taking advantage of inflated share prices that don't make sense with valuations to keep filling their coffers as a company. So if you want the fundamentals of GameStop to do well, that's a good thing. If you want the price to go up, it's not a good thing. And that's why the share price dropped so hard from the high of 67 all the way down to, the pre-market low of whatever it was, 38 or 39. And that is in response to that. So, just a huge move up and a huge move down, and definitely lucked out a bit in terms of getting to the computer at the right time to sell that position last night. And as we head into this next week, some things to anticipate. I anticipate way less volatility than this week that we're just finishing. I know that my trading dollar volume of GME this current week compared to next week's probably going to be about 10% as much volume for my trades jumping in and out. And that's because when you get these periods of significant volatility, you may see it in one direction, you see it in the other direction, and then you tighten up. So I'm going to be watching on the weekly time frame. I'm just viewing this as the low of where we came from. And again, bear with me. I don't have my mouse, so I'm using the pad here, and I'm sure I'm shaking the camera. But we've got our high, our higher low. This is the most important longer-term support of 1770. And now it looks like a lower high at 48 is being set. And so I anticipate that if next week rolls around and we see a little bit of weakness continue, that we will look for potential entries between 17 and the low 20s, anticipating a higher low and a tightening range. Let's zoom into the daily chart and see what this looks like a little bit more clearly. Finding my delete button. So there's a short-term support, a daily higher low at 25.20, We held that level today by 92 cents. So that was a level to play off of. Someone looks at the chart and says, okay, our daily support is this. I'm going to make an entry above it. I'm going to put my stop below it. That's how you manage your risk and try and position. So what I'm going to be looking for in the short term is, number one, first thing next week, can bulls hold 25.20? If not, there's a gap to fill at 23.72. That's the next level to be looking at. Number two, if 25.20 breaks, it's all about 17.70. As far as any bounces, bears are waiting for lower highs, just like they were all day today. Every 15-minute bounce was a lower high for the bears to short. We had this, the high of the day at 48 and then a bounce here. And leading up into the live stream, I was able to say in our chat room, the most likely scenario is a 15-minute lower high. And I was able to say that because I've watched 10,000 15-minute charts look just like this over the last decade. And again, yes, the less likely scenario can happen, but we position ourselves for the most likely scenario. So we set the 15-minute lower high, and then it was just a downtrend for the rest of the day. And of course, the volatility dropped off into Friday afternoon. So if the bulls can show up, so we just got our support levels. Let's say the bulls show up on Monday morning. 30.49 is a level, 38.60, and then 48. Those are the most important three resistance levels. If the bulls are going to prove anything, we will need to see a bounce on the hourly with tons of space for the hourly lower high to be the result. We then have to hold where we came from and confirm that uptrend. If what I'm saying to you right now is gibberish, go to our website and go through the resources. We've got a decade of YouTube content in terms of basic technical, we got a free technical analysis course. We've got stuff about identifying trends, anything you could look for. And so if you want to learn this game, I highly suggest doing so. It's very worthwhile to do so. That's what I've been dedicating my life to as a top priority over the last decade. And it allows us to maneuver this kind of action with confidence and with keeping our risk managed and ideally locking in that profit. So fairly quick update as far as the technicals are concerned. I will be looking at those support levels for the potential of an entry, but again, also looking at bearish lower highs, because the way that shorts are going to perceive things now is, okay, what's left? He's done his stream. Yeah, he can do more streams, but he can increase his position size very significantly at this point. He can take some profit. That could be some further downward pressure. So again, just viewing it in the short term, let's just talk June. What's now a catalyst that can squeeze shorts from here? A bear is viewing this and saying, all right, with this dilution news, with his stream over, we're in the clear in the short term. Yes, there's going to be some small bounces along the way. There will be some volatility, but they are in the driver's seat now. And unless something significantly changes, I went out to dinner last night with another one of the chart guys, Joey, and my comment to him was talking about it. We were after hours yesterday. Out of retail, who's left to buy that has not bought at this point? And the answer is nobody. In terms of retail, maybe extremely, extremely late money, but the vast majority of people have positions that they're going to hold, and that's fine. A bunch of people took profit today, obviously, and again, I just don't see a short-term squeeze catalyst. So I'm going to be watching for the last time around. We had this kind of pullback and then slow grind, and so keeping an eye out for that kind of price action. We will keep doing updates. I mean, the algos told us yesterday, that's our highest viewed video in years with the GMV video yesterday. So thanks for the new subscribers that came along, and we will keep covering GME, but again, doing so with a very clear level head, doing our best to describe, the most likely scenarios. If I put out a video with a title of GME is headed to 200, I'd get more views, but that's not what we're here to do. We're here to try and help and give some useful information. So feel free to ask any questions. I love the interaction, and we will see you soon. Don't forget to do good things.